With the syndicate, it's really interesting because we're doing everything on a deal-by-deal basis. And what that means is that each individual person in the group can invest in the companies they want to invest in and can skip the ones they don't believe in. And I think that's really powerful for a couple of reasons.
Hola, soy Alex Galvez y esto es Fundadores, el podcast donde me dedico a tener conversaciones con fundadores de startups latinoamericanas para deconstruir sus experiencias, su historia, sus errores, sus aciertos y así encontrar los aprendizajes, herramientas e inspiración que tú puedas aplicar en tu día a día. Bienvenido. Hoy estoy con Ali Jamal de First Check Ventures, un sindicato de inversión muy activo en Latinoamérica que ha invertido en startups como Yomi, 30, Plurk y muchas otras. El episodio de hoy es en inglés, porque quería hablar con alguien que tuviera un sindicato exitoso y que esté activamente invirtiendo en Latinoamérica. Ali nos platica de su tiempo viviendo en Asia y luego en Latinoamérica trabajando para Rappi. Discutimos las similitudes entre Asia y Latinoamérica y platicamos de lo que es un sindicato de inversión, las ventajas y desventajas contra un fondo tradicional, su proceso de inversión y cómo agrega valor a las startups en las que invierte. Espero que disfrute esta plática tanto como yo. Ali, welcome to Fundadores. It's a pleasure to have you on the podcast.
Thanks for having me. Really great that we get the chance to chat.
I want to learn first about Singa. How did you ended up joining Singa and entering the startup world?
I did my undergrad and my master's at Stanford, and then started my career as an investment banker. I did M&A for 3 years, but I hated it. So I then became a data scientist, and I did that for the next 3 years, and I really loved it. But I wanted a chance to have more of an impact to get closer to building things. And I felt like that was really going to happen more at a startup and more at a place where I could have a product and growth role. And so, kind of looked around for the best place to kind of learn product management. And there was a big emphasis on gaming and mobile gaming at the time. And, Zynga had just gone public. And so there was a chance to kind of join a company that was still early enough in their journey that you could see a lot of stuff, but a little bit later on where you could kind of get the hands-on training that you need. So, Zynga had a product management training program. They had courses. They had other PMs you could learn from. So I felt like it was this perfect mix of still moving incredibly fast, still growing a lot, but having it in a place where there's also a lot of support and there's also a lot of people to help guide and coach and ask questions of and a peer circle. So Zynga was a really interesting experience from that standpoint. It just, they had, I think, a couple hundred product managers at that point. So there's a lot of other people that were in similar shoes that were also trying to learn about product management and, how to kind of go through prioritization and analytics and metrics and estimates and, POs and all this sort of product stuff that you get.
It was a great school, but maybe it wasn't as early as like other startups, right? And why did you decide to leave and to join RockU?
I had been on one of their games for about 6 months, and the way it worked at Zynga is that you're supposed to transition to other products, and then basically I ended up being in this transition phase where I was supposed to find another game to work on, but there weren't that many games in the pipeline, and they ended up doing a 25% layoff about 6 months after I joined, and I got hit with that layoff. And so, ended up having impressed some of the people that I'd worked with at Zynga. They made some introductions to other kind of companies. One of them was actually to RockU. And so, about a month after my layoff, I ended up starting at RockU and getting a chance to kind of go to one of the smaller companies. So RockU, when I joined, was only 40 people. But I was able to kind of bring that training from Zynga there and kind of jump right into a meaningful role. So when I was, at Zynga, I was one of, I think, 10 product managers on the game I was working on. And then when I went to Rock U, I got to be the sole product manager on a game. So it was a pretty cool transition to go from, seeing the big machine and seeing how everything works to then kind of really being able to call your own shots.
And how was like these layoffs? Because we're living a similar stuff right now, like in the ecosystem. But I was talking with a friend the other day, and he said like maybe, I mean, startups disappear or get smaller. But if you're good, you're gonna get like the industry as a whole is getting bigger. So if you're good, you can get a job in a new startup. How was the process?
I think I've been through a few industries that had transition periods. Because I started my career in investment banking, and then the kind of mortgage crisis hit, and a lot of people got laid off from investment banking, and I saw transitions happen there, and then then at Zynga there was the big round of layoffs, and so. I think that in one sense, right, like it's this transition period. And so it's very easy to get emotional about it and to start to worry about the future and everything else. On the other hand, it gives you a chance to evaluate what are you doing and why are you doing it, and a chance to take on a new role faster than you might have, right? And ultimately, for me, what I found is the more often and frequently I can take on a role, the more I can learn, right? Every organization has a different culture. Every role that you take on, you're going to learn different things, work with different types of people, and you kind of continue to get better. And so the more you can expose yourself to these different things, I think the better it's going to be. And what we saw with these past, depressions or recessions is, the companies that were inefficient, the companies that weren't as focused on what they were doing, the companies that were running with kind of poor economics where there wasn't as much of a demand, those were the ones that got cut. But the companies where people were building something that customers really wanted, that had been focused on those customers, that were looking at the financial impacts of what they were doing, those companies came through, right? And there's a huge list of these amazing companies that are built during the last downturn and the downturn before that, and I think that's going to continue to be the case. So I think we're going to see some transitions even within great companies, right? Like we were in this hyper growth mode, and now we got to focus on this profitability mode. So even some great companies are going to lay off some people, but I think that's just going to create opportunities for those people to find roles that are more aligned with their best skills and those best attributes, and ultimately probably lead to more stuff getting started, right? Some of these people that are getting laid off are really smart, and they're going to get 6 months of severance and decide to put that 6 months of severance into building something better. So I'm honestly excited about kind of the overall startup ecosystem going forward. And I think especially in LATAM, more than ever before, I think people have more of an understanding of what it needs to be successful and more help and support than what's ever existed. So there's a lot of investors looking at the ecosystem. There's a lot of tech talent looking at the ecosystem. I think there's just a lot more opportunity here than what we saw ever.
Yeah, I couldn't agree more. It's the best time to build in Latin America or to invest in startups in America. But to be honest, I say that almost all the time because it's true. Now it's a better time than last year, and last year was a better time than 3 years ago because the ecosystem is growing a lot. There's a lot of talent, a lot of capital, and right now with the downturn, there are even more opportunities.
Yeah, I think where seeing a lot of stuff, a lot of ecosystem finally come together, right? And Mexico, went from having 0 unicorns in 2020 to now, I think there's 5 or 6. I haven't seen the latest numbers, but in just a year or 2 years, this thing that seemed very hard is now much more common. I think that's just going to continue to have impacts across LATAM.
Yeah, exactly. And speaking about leaving the comfort zone, you left Rockview and worked in Agoda for a time, but you were in Bangkok, Thailand. And to be honest, that's a little bit difficult for an American. You guys don't want to leave the US and think that the US is the whole world. How was the experience to moving to a whole different culture and across the globe?
Yeah, so I think I'm a little bit unique where I had always kind of wanted to live abroad. And after every kind of period in my life, I had looked at living abroad and just never pulled the trigger. I was always just a little bit too scared. But, after college, I got a job abroad, but decided to take the job in New York. And then after leaving investment banking, I got a job overseas and decided to take the job at Silicon Valley. And then, each of these periods, I kind of looked around and tried to figure it out. But I was worried that I didn't have enough to contribute yet, and that the transition might be hard. But, I spent 4 years at Rockview and, had developed quite a bit of skill set, but also kind of realized, hey, the next job I take is going to, could be 5 years, it could be 10 years. And I want a chance to explore more. And so Agoda actually reached out to me and Thailand wasn't necessarily high on my list of places to relocate to. I thought I was going to do, Europe or Dubai or something along those lines. But, ended up going out there to interview in person and really loved the team. And then Thailand is a really incredible place, obviously. And I've been there on vacation. But, even in those few years since my last vacation and when I came out to interview, a lot had changed. And it really had changed because of technology. And technology's actually made it extremely easy to kind of get around all over. So, when I think back, and maybe I'm a little bit older now, but when I was in college, more than a decade ago, or going on trips right after college, right? There was always issues when you would travel abroad. You wouldn't know the language, you would get lost, you wouldn't know what to order and all that sort of stuff. But now, when you're in even a place like Thailand, right? You have a Grab or a Gojek, which is their local ride hailing. So you no longer need to worry about, talking to the cab driver, giving the wrong amount of money, getting lost, getting dropped off at a place you don't want to be. All that stuff is taken care of because of an app, right? It's really amazing. And then, if you want to understand what you're ordering, you can Google it and you'll get the local translation and you'll get the English translation and you'll know if you're ordering, chicken or pork or beef or something else altogether. And you can read the signs and translate the signs. You have Google Maps to show you exactly where you are in the city. And all these things that were difficult about traveling have really been made easier through technology. And I think that's the beauty of technology, right? Like it can kind of make some place that seems foreign and exotic actually, not that different than life in the US. You have apps that you can order food and groceries. You have real estate websites where you can look at apartments. You can go to Facebook or meetup groups to meet new friends. And all of a sudden, the world seems a lot smaller.
Yeah, it does. And the thing I love about Asia, and Latin America, it's like, to be honest, we're really similar. And I like to look at models that are working in Asia, and then I look for similar startups doing something in Latin America. Because sometimes entrepreneurs love to look at the US or Europe about the new business models, but like a lot of innovation is happening like in Asia that is really transferable to Latin America. I don't know, like the case of Oyo and Agenda. I don't remember the 30 has an equivalent, like actually I think you're an investor. Book or the other book can something like that. And that's amazing. Even like I heard a story once that Simon Borrero went to Asia and saw like the super apps and what was happening in China with WeChat, and he came with the vision and said, this is what we need to do in Rappi. We need to build a super app.
I'm actually the exact opposite, right? Where I was in Asia and I saw these super apps there, and I was using them all the time, right? I was using it for ride hailing, grocery delivery, food delivery. You can even use them for random services, right? You can use it to get a massage, or you can use it to get a haircut, right? You can use it as an ATM. And so I'd seen how helpful it had been in Southeast Asia, and I wanted to be part of the next one. And I had heard about Rappi before, but I kind of really started digging in after being on a trip in Brazil and seeing Rappi tenderos everywhere. And so I ended up reaching out to a couple people on the executive team saying, hey, like, you guys look really, really interesting. I'd love to hear more about you and what you're doing and if I could be helpful. And then, basically they said, hey, your profile looks super interesting. We'd love to see if you could be helpful here. Like, talk to this guy. And then that guy told me to pass with some other guy. And then, a few weeks later, I was on a plane from Bangkok to Bogota, and I ended up coming and moving to Colombia to join them.
And how was working in Rappi? Like, at the moment, you were like growing super fast. What was like the atmosphere in the company?
Rappi is in an incredibly intense place. I think if you listen to anybody from Rappi, they'll tell you that. It's a place where they're trying to do a million different things at once, and it's a very kind of decentralized structure. So there's a lot of individuals that have autonomy and are building, and there's a lot of ownership and pride, I think, within everybody I've met to be part of this company that is doing something big in Latin America. So it was just an incredibly intense experience. I think I feel like every week there felt like a month, and every month felt like a year, and it was just a place where just things were happening so fast, and everybody was just so passionate and excited about what was happening that it was really an incredible place to be.
Are there any stories that you remember, like from Rappi or from Colombia specifically when you moved there?
There's a lot of I think intensity would probably be the number one thing, and it's probably a combination of intensity and a little bit of chaos, right? Because everybody is kind of constantly trying to run around and get things done and get things done last minute. So, I had moved from the U.S. to Thailand, and then was moving from Thailand to Bogota. And, when I was at Agoda is a much larger organization. It's part of Booking Holdings, which is public. And so everything kind of around that move was super planned out. And I had my tickets, a month in advance. I knew which hotel I was going to stay at. I could forward all my luggage there. I could, tell when I'm going to go here. They gave me a housing tour. They took me around and let me see all the different people and had it structured in a way of kind of really getting introduced to society. And then on the other hand, Rappi was just a little bit less prepared for that, right? They didn't have as many people that were that were coming in, and the people that were there were kind of constantly flying around between the different offices. And, so I think I got my flight information like 36 hours before I was supposed to leave. Like they kind of said like, oh, you're going to leave on Tuesday. And then it's like Monday morning. And I'm like, well, where's my flight? And, like it was still a little bit last minute. And then I don't think I got my hotel information until I got to the airport at Bangkok, right? So I didn't know where I was going to go once I landed until I was actually already there. And then, luckily I'd already kind of been through the process once. And so it wasn't as, big of a deal for me to set up a bank account or all that stuff. I did it by myself. But, I felt like at a Agona, they kind of held your hand a bit more and walked you through it. Whereas at Rappi, it was just so much happening at once for everybody that they didn't really have time. It was just like, oh, you're here, get at it, right? And I think it's kind of like true in just like everything. So like they were just growing so fast. Like if you went and left your seat to go to the bathroom, you'd come back and your seat would be gone because their office has a shortage and there's not as many meeting spaces. So people just take other people's chairs to go and talk in little groups all the time. And like everybody's kind of packed together like sardines. And there's just this kind of a little bit of a kind of wild experience where you're kind of constantly kind of running around and doing things and trying to find a chair even, right? Like you might have to like work outside or something like that if you can't find one. So it was really interesting, fast paced, really drink from the hose, but really being mission driven and trying to have a big impact on the ecosystem.
Great. Yeah, that's amazing. Talking a little bit about angel investing. You have been angel investing for many years now. Like you started in 2007, but like you were doing it as a investing checks here and there, and then you decided to formalize it a bit more and to write more checks and started a syndicate. How was that decision to start a syndicate?
So, basically I moved to Mexico City in January of 2020, and I had, I think 6 or 8 weeks of Airbnb, and then I moved into my new place on Sunday, and on Thursday we started working from home permanently. And, I moved to Mexico City expecting this great opportunity to explore everything the city has to offer, right? And make new friends and meet more people. And instead, I'm kind of just stuck in my apartment and you're working on Zoom, whatever, 9 to 5, 9 to 6, but I needed something to do after that, right? And didn't have any friends yet. I was single. I didn't have a girlfriend or anybody else to like really hang out with. And I needed something to do. And so I was thinking about kind of a variety of different, side things I could do. And I ended up reading Jason Calacanis' book, Angel. And it's a book about, angel and angel investment and his angel journey. And I've been an angel investor on the side for quite a while, but I hadn't really codified it in my mind. Like, oh, these are the things that I really look for. Or this is what my thesis is, or this is like, what excites me and what doesn't excite me. And I think when I kind of read his book, he was basically kind of saying all the things that I had thought individually, but like putting it into like one place where it's written down. And the stuff, for me at least, was like very intuitive, but it was great to have it kind of reinforced that this is something out there. And I kind of realized like, hey, like I actually get this. This is one of the, greatest angels of our time, and his stuff makes sense to me, right? It's not like there's this huge intellectual gap between what he's saying and what I'm doing or what I've been thinking. And I've been seeing, my own unique deal flow, and I'd also been in a bunch of syndicates. And so I had seen the kind of deal flow that was in syndicates, And I thought the stuff that I was seeing on my own and catching on my own was actually pretty good. And so it kind of came to this thing where, like, I knew I'd wanted to do some sort of more hands-on investing at some point, but I thought it would be, 4 or 5 years down the line. And I said, hey, why wait, right? And I talked to a couple of other people who were syndicate leads, and I asked them about their experiences. And, basically they kind of said, hey, like, anybody can do it if you really want to do it. Is this something you really want to do? And I thought about it, and I was like, yeah, it is. And so kind of starting, July 1st, 2020, so almost a little bit over 2 years ago, I applied for a syndicate on AngelList and got approved, and then just kind of started building from there. A fund is pooling the money together, and then the fund's leader is deploying it. So you have to really kind of trust that fund manager's thought process and guidance. With the syndicate, it's really interesting because we're doing everything on a deal-by-deal basis. And what that means is that each individual person in the group can invest in the companies they want to invest in and can skip the ones they don't believe in. And I think that's really powerful for a couple of reasons. The biggest one is that you actually get to see the companies that we're investing in. You actually get to see the reasons why we're investing, and ultimately that you can kind of continue to learn and grow as a member of my syndicate about what good companies look like early, right? And what bad companies look like early. We're not going to have 100% success rate. So there definitely are going to be LPs in my syndicate who have better IRRs than I do, right? Like, and everybody's going to have their own custom IRR. And you can kind of start to, evaluate what were the things that I, invested in that didn't do so well. What were the ones that I missed out on because I didn't think it was going to work that did work, and you can learn from that. And I think that that's really unique versus a fund where the fund manager is kind of deciding how much money to put in, where to put it in. They're making all those decisions for you. And then as a syndicate lead, I'm on the opposite side where I feel like I have a little less responsibility to figure out how much people want to put in, and I can watch and understand how much people are putting in and kind of get a better sense of what things people really like and why they like them.
I like the syndicates a lot because you can invest on a deal-by-deal basis, and if you're starting, it gives you a lot of liberty. But on the other side, what do you see as some of the downsides of a syndicate?
The drawback for an LP, right? Well, the people that are joining is you're trying to make these investment decisions, but you don't have as much of the exposure to the founders or to the team as I do, right? So sometimes I'm making an investment because I love the team that much, and I just think the guy or girl who's leading it can out-execute everybody else, but you might not see that as an LP, right? That might not come through on paper. You might not see their hustle or their dedication. And then, while you do get to choose your own portfolio as an LP, it's hard to keep up with all the deals and all the deal flow across all the syndicates, right? Like, I think I get more than like 300-400 invites a month, and trying to go over all these deals, and sometimes they close very quickly, and you don't get a chance to read it or understand what's happening. And so, a lot of feedback I get from LPs is, I'd rather just have you make the decision. I don't want to have that thought process. And so those are probably the kind of two big drawbacks, that there's a chance that you miss out on great deals, or that you aren't really able to fully understand why a deal might be great. As a fund manager, or a syndicate lead, the drawbacks are a couple, right? So on one hand, I don't have a fund, and so I can't just deploy cash. Every time I'm going to go and raise, I have to go out to the group and say, hey, this is the company. This is why they're cool. This is what we're doing. And sometimes people will invest and sometimes they won't, but it's very unpredictable, right? And I think even the best syndicate leads have quite a bit of variability compared to like what they think they're going to get and what they actually get. And sometimes it's good and you oversubscribe, and sometimes you don't have enough cash. And so it's always this kind of rough game that you're playing. And then I think because of the fact that you have to go out and raise on a deal-by-deal basis, it makes the process a bit slower, right? So if you have a fund, you can just write a $25K or $50K or $100K check the next day and move on with your life. Versus with the syndicate, with the SPV in particular, the thresholds are higher. We typically need to raise at least $100K. And then every time that takes a couple weeks to a month typically to have the whole process. And so, we can't write a $25K check or a $50K check typically. So, you'll see deals where they only have $25K left of the round and you get squeezed out, or you see a deal where, the investment is closing next week and you can't move that quickly. So the drawback is probably that. And then ultimately, I think the last thing is probably management fees. As a fund manager, you typically charge, a 2% management fee of the overall pool of committed capital. As a syndicate lead, I don't get to do that. So, I'm not actually making any real money off of the syndicate right now. It's a little bit tougher. My parents kind of keep on telling me to go get a real job. But I think that the impact that we're able to have and, what we're building, and we won't see it right away, right? It's going to take, 5 years or 10 years for everything to come through. But I think, from what I'm seeing in the initial monthly reports and we're seeing some companies get up rounds, I'm really excited about what we've been able to invest in. I'm really excited about what these companies are building and a chance to have that kind of impact on the ecosystem.
Yes, I love syndicates and it has a lot of advantages. But on the other side, if you're investing and if you miss the big winner and you of 10 companies you invest in 9 and you miss the big winner, then maybe you're not having all the advantages. Like for someone that doesn't have the time, maybe it's good to just have a fund manager. Or you can make a big mix of both. Maybe participate in some syndicates with smaller checks where you can learn, and also invest in a couple of funds so you can learn. And your syndicate it's pretty big. I've done some syndicates myself, not as many as you. Actually, we invested together in Clerk. How have you grown your syndicate so much, and what will you tell that to someone starting a syndicate?
Sure. So I think the biggest piece of advice I would have for somebody starting a syndicate is why making sure you understand why you're starting a syndicate, and if this is something that you really want to do. If you just want to do a deal a year or a deal a quarter, it's a lot of work to just do one deal a year, one deal a quarter. There's other ways, I think, to get those deals funded. And really kind of understanding what your kind of unique value prop is, how you're going to get into great investments, how you define what a great investment is, how you're going to find people who think the things that you think are great investments are great investments. Right? It's not that easy, and especially now as we, kind of head towards a recession, people are more conservative with their cash and more conservative with their investments. And so it's tougher and tougher to raise. And so right now, if you're not one of the top, X number of syndicates on Angel List, it's been really, really tough for people. And so what is going to make you one of those top, X number of syndicates? And I think the second thing that I would talk about is, really putting the effort in. So, before I launched my first deal, I spent 3 or 4 months just talking to LPs, figuring out what they wanted. And it wasn't even LPs, right? It was potential LPs. It was people I knew, like ex-colleagues, people who I went to school with, people that were friends or friends of friends, family, relatives, anybody who I could talk to, basically say, hey, this is who I am. This is what I'm doing. Do you want to come and see some of the deals I'm going to invest in? Right. And, some people are going to be weirded out. They're not going to know what startups are. They're not going to know what investing is. Like, I spent a lot of time training people and educating people on, what's the difference between a pre-money safe and a post-money safe, and what is, this, Series A and Series B and pre-seed and seed, and what do all these terms mean? Why is this thing an ARR? Why is that thing a GMV? And what's the difference? And how do we kind of think about it? So I spent a lot of time kind of just talking to people, understanding what they were looking for, and then bringing them into the syndicate before I even tried to do a deal. And then I wanted to make sure that when I did a deal, I could close it and I could fill it. And so, building up that relationship with potential founders that I might invest in and explain them my situation and where I am in the process, right? Because I think the only thing you really have in this is your reputation, right? And so you have to be honest and upfront and a great partner for both your LPs as well as your portfolio companies. And so that's kind of been the biggest thing for me, is try to be that great partner, and trying to work as much as I can on building something meaningful.
And how do you add value to portfolio companies? Like, you have invested a lot. I'm not sure, maybe 60 investments last year. How do you meet with them and add value?
So I actually do a lot of stuff informally. So every one of my founders has my WhatsApp number, and we're all kind of constantly texting back and forth. And most people don't need help every day or every week from their investors, right? Like, it's more of a once a month or once every couple months type thing. But if founders are texting me once a month, and I have I probably have about 100 investments at this point, that means, I'm getting a text 3 times a day, right? And most of the time it's a couple lines back. Sometimes you have to hop on a 10-minute call or 15-minute call. So it's really not that much work, right? And, I can review their decks, or review who they're targeting, or review their metrics and give them feedback. And, actually having had a role in, multiple unicorns in LATAM, I kind of understand what good looks like and what doesn't look like. And hey, these things on your plan don't really make sense to me as a growth person, or this thing doesn't make sense on your product roadmap, or, as a investor, I want to see more on this story and more about, when you're going to reduce your burn, or how you're actually going to grow GMV 5x over the next year, because that just seems like a really high number. Right. And so a lot of it is just kind of giving very honest feedback, and they don't need a lot of hand holding, right? Like I'm making investments in founders where, basically my role is to be the coach, right? You pull them aside, you give them a couple of pointers, and then they get back at it. They're the ones that are actually out there playing the game, right? And so I'm just kind of jumping in from time to time and when they want it, right? And being helpful. And so I tend to, expect the founders to, and I have this in our expectations, right? Like, hey, you guys are going to come to me when we have these problems. I want you to come to me when you have these problems, right? I'm not going to sit here and be your dad or your mom and check up on you every day, right? Like, you don't need that. I don't need that. I don't need to scold you and check your homework. But if you are having issues, I want you to come to me, and I want to be your partner, and I want to be helpful. And so I feel like it's just kind of being very upfront about the relationship. And a lot of the founders in my portfolio have said, Ali, you're the most helpful investor on our cap table because you give that honest feedback, and every time we need you, you're there, right? So I think it has been a big focus for me to try to be impactful and try to be helpful, but it doesn't take up as much time, and it's not as big of a deal, right? Like if you know what you're doing, even in a short period of time, you can have a big impact.
Yeah, I agree with that. And like, to be honest, with the feedback, that's always good, because here in Latin America, sometimes we don't give that much of an honest feedback.
Yeah, I think that's one of the things that I've heard a lot from the founders is like when I don't like something, I'm more than happy to tell you I don't like it, right? And even some of the companies I invested in, when they first pitched me, I told them, hey, these are the things I don't like about what you're building, and if you fix these things, I'm happy to talk again. I like you as a person. I want to be your partner, but this idea is not an investment I can back. And several of them, took that advice and adjusted their idea or adjusted their product based on that, right? They kind of realized like, hey, Ali's right. This isn't a thing that makes sense for us to build. Let's go build something more meaningful. And, because I've been honest, because I've been open, I didn't just pass, but I gave that feedback about why I'm passing. They were more than happy to have me come in and invest later on.
Yeah, and what do you like? You write a lot of checks like really early in many companies. So you talk also with other early stage investors. The thing I see about seed stage or pre-seed, it's that it's difficult to convince those first checks because if you are raising, I don't know, $1 million, nobody wants to be in the second check because there are not many incentives to be that early on. What would you say to a founder that is raising like a pre-seed or one of the earlier rounds? How should they approach the fundraising process?
So, I think one of the things you said is interesting. Where you said they're raising $1 million, and from what I've seen, most pre-seed funds don't invest really $1 million checks usually, right? Like our averages tend to be somewhere between 100 to 300 for most of these, maybe up to $500,000. And so if you're raising $1 million fund or $1 million raise, what ends up happening is everybody's kind of waiting for somebody to take the lead. And so, if you need $1 million, you need $1 million, and that is what it is. But I would really think about, hey, what can I do with $200K or $300K or $500,000, and how much runway does that give me? What can I prove out in that time period? Most of my early investments, I'm not writing $1 million check. I'm writing a $200K check or $250K check, and most of the companies that we invested in aren't raising $1 million in the first 3 months or 6 months, right? You don't need $1 million in the first 6 months of your company. What you need is enough to help prove out the product market fit, to prove out these other things. And so if you come in with this big ask, then you have to have the traction and the numbers and the market proven out enough to get that big ask. If you come in with a smaller ask, it's much easier for me to figure out where you are in and what you're doing and keep track. Even if I want to invest $500,000 in you, I might prefer to invest, $200,000 right now and $300,000 in 6 months once I've seen what you do with the first $200,000, right? I think it kind of gives investors the option value. And so the first thing I would probably say is that, I don't think most companies, you don't need $1 million right away, and asking for that, especially in Latin America, is going to be difficult. And then I think the second thing I would say is a lot of these businesses don't need a ton of cash up front, right? So figure out what you can do without a ton of cash. How can you prove to your future investors that this is what you want to build, that this idea is going to work? What are the different ways that you can kind of bootstrap to some results? I think that's extremely important. Build the relationships and build the relationships early. So, I'm not going to invest in you the first time I meet you. It's going to take several calls. And so, those calls don't need to happen all within a week. You could build the relationship over a month or 2 months or 6 months, right? So I was talking to Trenta for 6 months before I made my initial investment. Right, and we built up a relationship where they knew that I could be helpful. We talked about their product roadmap, we talked about their growth plans, we talked about all that sort of stuff. And when it came time for them to raise, they knew they only had to come to me because they knew that I was excited by what they were building, and I felt comfortable, coming in and making that jump because I'd seen what they've been able to do over the previous 6 months and how. Well, they said, hey, we're going to build X. They built it, right? And they said it's going to take 6 weeks to come 4 weeks. And they said that they would have 1,000 customers. They had 1,200, right? They kept on being able to beat their expectations and, beat my expectations. And so I think that's a big part of it is, can you build these relationships? Can you get a warm introduction? A much more likely to trust something that's coming from somebody I know, if that somebody I know actually knows that, right? So don't get a warm intro if you don't actually know the person you're getting a warm intro from. The first question I ask people is oh, how do you know this person and how well do you know them, and are you thinking about investing? And if they're like, hey, I don't know this person, they just reached out to me randomly on Twitter, and now I'm passing you their deck, it's okay, well, they could also just pass me their deck on Twitter. I don't get it. It's get a warm intro from somebody you actually know, and start building the relationship and explain, hey, we're not raising right now. We're raising in 3 months, but we want to at least talk to you earlier. And it's most of the great investors that I've seen in Latin America do that, right? They start having these conversations early. They build it. All the big firms, right, will still talk to you pretty early if what you're building makes sense to them and if you have a good reputation in the ecosystem.
Yeah, it's a long-term game, and you gotta build those relationships. And it's true that to build something in Latin America, you don't need. I mean, it depends on the business and everything, but you don't need a lot of money. You can start with 200K, 300K. You go pretty far in Latin America, hiring people and building stuff.
I think that's actually the exciting part about LATAM is that even with a smaller budget, you can have a bigger impact. Right? Engineers don't cost you $200,000 a year here. You don't need to have the San Francisco office that costs you $1,000 a square foot or whatever, right? You can be a remote first team. You can, pay the market wages for great engineers, and your budget should still not be, $1 million burn rate a year, right? Like your budget could still be pretty good, even when you have a great team in these markets.
Yes, I agree. Let's go to the final part. That are some questions. The questions are short. The answers can be short, long, or whatever you like. What book do you love to recommend?
So I kind of mentioned it earlier, but I think Jason Calacanis' book Angel is a really great read for anybody who's thinking about getting involved in angel investing. I think if you haven't had much exposure, I think it's a good fundamental base. But even if you have exposure, I think it kind of helps to just kind of organize your thoughts a bit more, and how do you prioritize between great idea versus great founder, or how do you prioritize between all these different things? And some of the concepts, some of the things he said in there, I disagree with.
Like what?
I think when he wrote it, he said. So he said that if you want to be a great investor, you have to be in Silicon Valley, which I don't think is the case any longer, right? I think we're seeing great companies from all over the world, and I think everything's kind of moved remotely, right? So I think when he wrote it, it might have been more accurate, but I really think that international companies can have a big impact. That you can have, you see unicorns all over the ecosystem these days, and I think it's really exciting. And I think although there's some points like that where I disagree, I think overall I think it was a really interesting book, and I think understanding where you disagree or why you disagree, it can also be really helpful to just shaping your own worldview.
Yes, I agree with that. What belief or habit have you changed in the past 5 years that has improved your life?
I think one of the big things that I've done is just get more and more used to talking to people. So, I started my career in investment banking and data science, and even the beginning of kind of like product management. A lot of it was kind of being an individual contributor, and I could go off into my own little world, do my analysis, do my research, write up a report or an email or whatever, and tune out the rest of the world, just concentrate, grind, and get my work done. But I think starting really kind of when I moved to Agoda and I started managing a bigger team, and then in Rappi and Clip, I managed these bigger teams, I really had to spend more and more of my time in meetings. And, I kind of hated it, to be honest. Like I wanted to be work and be productive, but I needed to manage the team and talk to other key stakeholders and talk to my boss and be in all these special initiatives and all this other stuff. But I think the habit of building that muscle of being able to jump in and talk to a variety of people and switch up topics and, start to really kind of dive in, has really prepared me well for kind of this thing that I'm doing now, where, as an angel investor, I'm talking to 50 companies on Zoom every week, and kind of constantly trying to jump back and forth and understand who's talking to me and why they're talking to me and what are they building and how do I feel about this. And so I think that's been something that I've really kind of focused on over the last 5 years, and being able to go from a meeting and then just jump right into the next one versus having, an hour to decompress or go for a walk or go listen to some music or grab a coffee or something to clear your head. Now I just kind of have my head constantly jumbled, and sort things out at the end of the day.
What do you believe that most people disbelieve?
I'm a big believer in a lot of these emerging markets. I think it's becoming a more popular opinion, but I really think that there are great opportunities kind of all over the world. And fundamentally, people are the same. And so these things that we see, in Asia that are solving big problems, we still have all the same problems in Latin America. right? And I think that the roadmap to solve some of these issues exists, that we can then solve it in LATAM, and then those same problems also exist in Africa, right? And so I think that each monitoring all these different ecosystems, and you only need kind of one case study to kind of figure out how to make these things work for everybody else to kind of figure out how to make these things work, right? And I kind of think back, like there was ride hailing kind of before Uber and Lyft, right? But then once they kind of started to figure out, it made it a lot easier for Grab and Gojek and Kareem to like figure out what do we do and how do we do it, right? And so we have all these experiments kind of happening across the world, whether that's on banking and marketplaces and prop tech. Like we have these same problems kind of everywhere, and so in kind of a weird way, the whole world is kind of one big A/B test, right? Kind of localized country by country. And hey, like Nubank worked really great in Brazil. What's going to work great in Nigeria? And what are the things that made Nubank great? And why does it, like, what's the Nubank of Nigeria going to be? Or what's the Nubank of Indonesia going to be? Right? And we can say, oh, hey, Kata book worked really well in India. What's the Kata book of Africa going to look like? Right? And why is that something meaningful?
Yeah, great. Do you have an advice that somebody has given you that you think it was really useful?
I think one of the best pieces of advice that I got was when I first graduated college and I started my job. I gave in my first project or whatever, and my boss pulled me aside and he said, hey, like, in college, when you do something and it's 94% done, that's an A, right? You're super happy. You got a 4.0. In real life, if something's 94% done, it's not done, and you failed, right? And if you want to get something done, you have to get it to 100%. You have to get it over the line. Otherwise, it's worthless. And so I think that was something that really kind of made an impact on me. I like to do a lot of different things. I like to do a lot of different things at once. I have a tendency to get things to 90% and then kind of get bored. And so realizing that if I really want to get credit for these things, I got to take that last 10% and finish it off. I think has made a big impact as well.
Great. Over your career, you have learned a lot of things. If you would only have like 2 learnings that you wanted to pass to your kids, what would those learnings be?
I think the first one would be keeping yourself open to opportunities. The more you put yourself out there, the more things appear. And so I think in a lot of ways you can kind of create your own destiny by being open to things. And so going and trying to learn, trying to explore, keep looking and seeing what else is out there. And then the second thing that I would really highlight is just there's no shortcut for hard work, right? The harder you work, the more you learn, the more you grow. And so be open to that, right? Like be open to digging in and getting your hands dirty. I think that's one of the best ways to really learn and to grow is by actually going and executing.
Yeah, I agree. Ali, thank you for your time. It was great talking with you and learning more about your syndicate and what you think of emerging markets.